Hey traders, welcome back to another weekly forex forecast. As always, we're going to start with EURUSD, following gold, and then some other major currency pairings. So if you do enjoy these videos, leave a like, and without further ado, let's just jump right into the charts. Right, so as always, EURUSD, monthly downtrend, monthly uptrend. Price is currently getting squeezed in between the monthly downtrend and the monthly uptrend. Nothing to see here. Let's move on to the weekly time frame. Now, the weekly time frame, we can see some sort of consolidation, also a M pattern, meaning that it could potentially break towards the downside. However, not likely, since we did get a bullish engulfing candle on the weekly time frame, bouncing off this area of support. Now, the moving averages 25 and 50 are definitely showing a downwards momentum. However, if we have a look at 100 and 200 moving averages, they are well below the candlesticks, meaning that a potential long-term scenario is still towards the buy side rather than the downside. Now, let's move on to the daily time frame. Now, daily time frame has a lot of information. It's trending towards the downside and trending towards the upside, bouncing off this area of support, right? So what can we do? Where can we place a trade? Well, since it's trending towards the downside, we really need to maybe wait for a push exhaustion push scenario, breaking the 25 and 50 moving averages before we can enter a long position. Because on the shorter time frame, such as the daily, moving averages are, following a downwards pattern. There's also an area of sensitivity over here, which could potentially kind of bounce off and try to retest this previous area of support. Price is currently getting squeezed, definitely, but that's why we need to be aware of this. On the 4-hourly time frame, it's a little bit different. It's still trending towards the upside, and we can see this nice 4-hourly trend, right? So what's currently happening? Daily downtrend over here, 4-hourly uptrend over here. Price is definitely going to squeeze through and shoot towards the upside or the downside. Now, we had a bullish engulfing candle over here, but it did bounce back towards the downside. It could be a potential pull back towards the 25 and 50 moving averages. And if we would get a bearish candle over here, dragging the candlesticks further down, and then maybe get a bullish engulfing candle somewhere, we could potentially enter a trade from this 4-hourly trend bounce and then try to retest this previous area potential zone. So as you can see, if we would long this position, it could potentially be, around 80 pip take profit level if we would wait for the right opportunity and enter somewhere here. Now, on the other hand, if the price does manage to break 25 and 50 moving averages, we could potentially see a push exhaustion push scenario to retest this previous bottom level over here. However, I believe if we do get a push exhaustion push scenario, it probably wouldn't be the best risk to reward ratio, maybe 40 pip profit. So you could potentially enter for a scalp trade, maybe on the hourly time frame. Let's see what the hourly time frame is doing. It is trending towards the downside, so maybe if we would get a nice bearish engulfing candle kind of breaking this area zone, then it would be a nice trade towards the downside. Otherwise, with this trade, I would really wait for some sort of move, maybe towards the upside. That's what I would like, or maybe a bounce of 25 and 50 moving averages with a bullish engulfing candle, then a trade towards the upside. That would be my favorite scenario, and I hope it comes to fruition. Okay, so gold US dollar trending upside, trending downside. A little area of resistance are marked. Nothing special over here, just the previous top. Anyway, trending down, trending up, same on the weekly time frame. Not much to see here. The moving averages are trending towards the downside, it says on the weekly time frame. However, on the monthly time frame, is trending up. So obviously the information that we are given is fighting against each other. Let's look at the daily time frame. Now, the daily is trying to break through the 25 and 50 moving averages. However, there is an area of resistance over here, double top basically shooting towards the downside. So it does say that this area zone is very likely a strong resistance area on the daily time frame. It's also trending towards the upside, meaning that it's currently on a squeeze pattern. Whether it's going to break towards the upside or the downside, we currently don't know that. Let's move on to the 4-hourly time frame. Now, the 4-hourly, as you can see, trending towards the upside, tested the previous area top, pulled back towards the downside. Now it's still trending towards the upside, and it could potentially bounce off the 25 and 50 moving averages. If that does happen and it kind of pulls back, maybe a bullish engulfing candle off 25 and 50 moving averages, then it could be a nice trade towards the upside. As you can see over here, it could be a nice potential uptrend forming in around this area zone, crossing near the 25 and 50 moving averages. If this does happen, then it could be a nice long position towards the upside to retest this previous area top. Obviously take profit 1, 2 and 3 maybe potentially if it continues to shoot up to maximize your profit gain. Stop loss just below the moving averages or this area of trend over here. It's always best to buy gold rather than sell it because gold overall is trending towards the upside. However, it is currently on a little downwards momentum. It always happens. History has told us this, after a huge spike, it goes down and then pushes back up, push exhaustion, push scenario. So if we do get a nice bullish engulfing candle somewhere in between the 25 and 50 moving average lines, I would definitely take this trade for a buy. Okay, so USD Japanese yen on the monthly time frame trending towards the upside. You can see this by the 25 and 50 moving averages shooting towards the upside. Now let's have a look at the weekly time frame. Right, the weekly, there is an area of important resistance zone. The 112 0 level is also a psychological level. That's why you can see a lot of bounces of this area zone, which is super important. The psychological levels act as a area of resistance. We also see on the daily time frame a nice not a steep trend, I would say, but a nice trend towards the upside, also trending towards the downside on the 4-hourly time frame. So price is getting squeezed kind of, however it is bouncing off this trend line. We can see it over here and this area of support. So very likely we see this bearish engulfing candlestick. It could potentially pull back to retest this area zone. If, however, it does retest it, more than likely it's going to shoot back up. In other cases, to enter a trade long for USD Japanese yen, it would be a nice trade towards the upside if we would break this area of downtrend. That would be a great trade towards the upside because it's currently trading near the 110.000 psychological level in this area zone. What does this mean? On USD Japanese yen, especially currency pairs, Japanese yen really does like to respect the psychological level. So 110, 111 or 112 I talked about now, the psychological levels are really being respected as support and resistance levels. So if we do manage to break the 110 area, push exhaustion, push scenario, that could be a great trade towards the upside. In other cases, a trade bearish engulfing candle could potentially mean a nice maybe scalp towards the downside, but I wouldn't really risk it that much. Maybe on the daily time frame it is trending towards the downside, but we need to remember that buying orders, a lot of buying orders are here. Trend is towards the upside still, even though moving averages are telling us 25 and 50 are well above the candlesticks, meaning it's trending towards the downside. The higher time frames such as the weekly and the monthly time frame, as you can see, shooting towards the upside. Same thing on the monthly time frame. Broke this area of downtrend, massive downtrend broken. Push exhaustion, push scenario, very likely. Whether this will happen this week, I'm not too sure. Maybe a pullback, consolidation, and then a shoot or attempt towards the 1110 level. If the 1110 is broken, it would definitely be a good trade towards the upside. Right, so GBPUSD trending towards the downside. Nice consolidation, support and resistance of the monthly hasn't been broken, being respected nicely. Moving averages are below the candlesticks, meaning it's on a bullish pattern rather than bearish. If we have a look on the weekly time frame, weekly bullish engulfing candlestick, very likely going to retest this previous area zone, but we can see a strong area of resistance. Look at these wicks, 3 wicks here, 2 wicks here, 1 here, 1 here, right? Area of resistance, very strong. And then we have this area top that could be reached as well. It's definitely attempting to do something about it. However, I'm not too sure. On the daily time frame, we can see push scenario bouncing off the area. It does seem like it broke the 25 moving average area. However, a pullback is more likely than anything else. So on the 4-hourly time frame, we can see a nice trend. If we do get a push exhaustion scenario, maybe bullish engulfing candle somewhere around here, then we will expect a market turn around and shoot towards the upside to retest this previous area top. My main concern is if we have a look at hedge funds, Great British Pound versus US dollar, from 21,000 to 7,000 to minus 3,000 to minus 5,000, meaning that Great British Pound is likely to start shooting towards the downside. So if this does happen, we are waiting for 25 and 50 moving averages to be crossed towards the downside, and this area is going to be broken, and then we are shooting towards the downside to retest this previous downwards level. However, hedge funds are not always correct, and this data is 3 days old as well, so it could be just a correction and a push towards the upside to break this, to retest this area top, which is a likely scenario since it's trending towards the upside on most time frames. And with a bearish engulfing candle on the 1 hourly time frame trending towards the downside, it could mean that the pullback is also very likely towards this moving average zone. If the pullback does break, then definitely gonna retest it. As you can see, strong push towards the downside could mean a strong push back towards the upside for a pullback. Now, USD Swiss franc, we can see a nice consolidation, trending down, trending up. Let's look at the weekly time frame. We can see this much more clearer, trending towards the downside, nice push towards the upside. What's important on the weekly time frame is this recent close. As you can see, bearish engulfing candle breaking 25 and 50 moving averages. Very nice in this case, shows bearish momentum. Now, daily time frame, you can see this is also broken. 25 and 50 moving averages are well above the candlesticks currently, which is definitely a good thing if we want to place this trade short. Now, on the 4 hourly time frame, we can see a nice bearish engulfing candle has developed. Very likely will shoot towards the downside, but since he has been strongly pushing towards the downside, it's due for a pullback. So if we do get a pullback towards the 25 and 50 moving averages following this nice downwards pattern, it could be a nice trade towards the downside. So I would wait for a perfect pullback around this area zone. Bearish engulfing candle as confirmation, shoot towards the downside to retest this zone. If it's broken, push exhaustion, push towards the downside, and we are profiting and maximizing our profit gains this way.